Our investment strategy is we're a growth-focused private equity company. We've been around since 1998. We're a small partnership, having invested 2.1 billion euros since 1999. And our specialty is really in growth, in finding companies who show above average growth in a European environment, which we all know grows at on average 1% of GDP. So our key KPI is revenue growth, which is also 100% our valuation driver. So if we look at all of the deals we've done, 34 since 99, 100% of the value would have been generated through growth, revenue as well as profit growth. We make a bit of money on multiple expansion, and we actually lose a little bit of money on what we call deleverage, which in this case is actually re-leverage, because we put more money into the company's future growth than the companies producing cash themselves. Really good question. I think Simon made the point yesterday that we are a service industry to the entrepreneurs, which is actually very true if you think about it. 97% of our deals are with entrepreneurs, except for one public to private. So it is really our core specialty to support entrepreneurs in the future growth of the company, in institutionalizing the company, in sometimes doing things they don't do themselves, which is one of the big supports we do together with themselves. What we often see is that companies have reached amazing growth in the past, but they have reached a stage where a new investor can help a lot by adding new ideas, adding new people to the board, and helping to add new managers to do what the companies want to do, whether that's going into new products or going into new geographies, i.e. supporting the growth of the companies beyond just putting in capital. I guess we always hope that the investment is going to be successful, which for us means that we have invested in a successful growth company. We're a little bit different to venture, and there's a lot of venture at the tech tour. So let me just make that point maybe, that in our business model, we invest in 10 companies, and at least 9, ideally 10, really have to work. So it's not the 50-50 approach. It's really a 100% approach, which is why we spend a lot of time with few companies to make sure it works. Now, at the same time, to give you an answer, I think there are a few patterns of growth. A, the company has to be in the right sector. So we, for us, specialize in 6 what we call thesis areas, which are very well-defined areas we like, but we also know very well because we've met the companies in those areas, we've met the people who have been successful or are being successful in these areas. So that's very important, and usually we get it right because we focus on what we know. I think the second part, which is much harder to get right, is to invest in the right team, which basically boils down to the entrepreneur we support. So we tend to spend a lot of time with the entrepreneur. I always say he needs to do as much due diligence on us as we do due diligence on him, because at the end it's really a partnership which needs to work. And the third pattern of success for a successful growth company for us is very simplistic, keep things simple. So we try to keep the capital structure simple. We invest in the same strips as the entrepreneur does. Why do we do that? Because we are very focused and quite concerned actually about disalignment of incentives. So we'd like everyone to be able to focus on the same aligned incentives, which for us is growing the companies successfully. First of all, events like this are great. You can see the scenery, it's amazing. But I think on a more serious basis, it is the networking for us. It is understanding trends, which helps us to refine our own 6 thesis areas. And we've heard a lot about fintech, for example, in the last panel, which is a very important area for us. We've just made a big investment in last year. Beyond the thesis areas and the networking, I think what it also helps me is to really recognize who we are. And I think while the investment community is maturing, this becomes a much more important question for us as well, so that we know whether we are right, because for the entrepreneur at the end, it's less about whom he gets as a partner, more about at what stage is he now, and are we the right partner for him at this stage.